Yeah, I like the idea of the cash brokerage product that you guys offer. What are some other aspects to it?
So the buyer network provides really good intel on where our buyers are for coverage demand. When buyers are short, we're the first to know. So we are reaching out to our growers via impromptu, Twitter, emails, or just a list of products that our growers do have on hand. We're currently dealing with over 60 buyers across Canada, northern US. So we really have a good grip on where pricing is, and we're pretty up to date on any new demand that we see surfacing. Again, like I said, on average, we're very competitive with most and all line companies. Our grower network is continuously growing. We're always growing our buyer network as well as our grower network. All of our growers, we have a really great retention rate because we really focus on each and every individual grower. We're there for them in every contract that we do. We're there for our buyers in any issues that we have. Our growers know that they can call us and we are there to resolve each and every problem that there has ever arisen. Otherwise, we're trading over 20 different commodities that are grown basically across the prairies. Anything you could grow, typically we have a market for. If we don't, we will find one. And we also trade virtually any quality or quantity. If it's feed, if it's heated, if it's wet, anything, all of the above, we do have markets for.
Well, what are some of the things, relationships are so important when it comes to dang near anything, let's be honest. What do you do to foster these relationships? Why does StoneX have better relationships with grain companies or farmers than other companies do, or than other services do?
Well, because we focus on relationships versus transactions. We don't make each contract or anything that we do with these growers, they're not just a transaction. We follow through. We're there for them. We support them in any events that something doesn't go right. We are there for our growers and our buyers. Looking
at customers as people and not just dollar signs goes a long ways in a relationship building. I had to buy out a little bit of grain and whatnot, and the transaction went fine, but there was a lot of horror stories out there where there was either unexpected charges or the bio dollar was way higher than it should be. Do you think you guys had any more success than me as a farmer had dealing with these companies because of the relationships you've built with them?
Well, going into a lot of these contracts, we're talking new crop. Typically with these contracts, we make sure it is solid and there's no room for any voids and there's no room for any further discussion if, let's just say, that crop wasn't produced. A lot of our contracts come with an act of God, so that will cover them in any event. If it's a drought, if it's too wet like this year, our growers are able to come back to us and say, look, we weren't able to produce this due to whatever the circumstances are, and we're able to get them completely out of that contract without any costs or anything above their head. If there wasn't an act of God, we do go to bat with them. We look at any other ways to either roll the contract to the following year. And our buyers have been around for 20 plus years. We have really great relationships with them where they're going to work with us and they're going to say, look, I know this grower wasn't able to produce these acres. They don't have an act of God. We're going to look at maybe rolling to the following year at the same price or the same contract terms. So typically we're able to come up with something in the middle that satisfies both the buyer and the seller.
See, that's where it's kind of cool, where the no risk crop marketing and the cash brokerage come into effect, because the one is hedging the contracts already. That's kind of how it works, right?
Yep. So we do new crop as well as spot.
We really promote what we call a portfolio approach to grain marketing. So looking at all the different types of pricing tools that are available and using the ones that make the most sense at the right time. There is no silver bullet. Every year, every producer, every season is different. But something that's always really front of mind for us is we need to walk that balance, or walk that line of physical production risk and managing that, and physical and financial or your market price risk exposure. And so there's physical sales always have a place and they're super important, but there's going to be a point where producers aren't comfortable taking on more. And that's where financial products can really be valuable in protecting that price without taking on further obligation, Or alternatively, if you've made a physical sale, you can take another financial position to essentially allow you to participate if the market goes higher. And it's something we've looked at a lot this year because I think to some extent producers are bumping up against a fear of pricing grain because a couple things. The prices are incredible, but they have concerns from last year of buying out contracts and that type of thing. But also it seems like every day these prices just go higher. And so there's sort of a fear or an apprehension of pricing in case prices go higher. Using those tools, it's not perfect, but if you do end up in a situation where you're buying out a contract, that financial piece of it that we've added can sometimes help you offset the cost of that buyout if you get into that situation. But ultimately, we're trying to avoid those types of situations.
Natalie, at StoneX, do you guys make recommendations when we should sell our crop?
Yeah, absolutely. That is, so when I talk about creating a customized marketing plan and risk management plan for a producer, and then helping them execute it, that execution piece is literally, okay, these are the things we're seeing in the market. This is where we're positioned. These are the companies you should be looking at. Let's do 5% of your production at this level with a net price contract, or maybe it's just analyzing the basis component. We'll do basis or futures. So our recommendations are actually quite specific. They're not just time and price, they're also which tool to use.